Hi everybody, my name's Ian Hawkins. I'm the head of content here at Swoop. I'm delighted to welcome you to our webinar on this week's budget and what it means for your business. Before we get underway, a little bit of housekeeping. First of all, we really welcome questions today, but please put them in the Q&A box because if they're going regular chat, I might miss them. So Q&A is where those questions need to be. And if you have a question, we really do want to answer it. The chat box is where you can drop us a message if you're having technical problems. So my colleagues are sitting quietly in the background. If you have any problems at all, they will leap into action and make sure that we're all audible and visible once again. But my experience of Zoom is if you just come out of the meeting and go back in again, that almost always solves all of the problems. In any case, this meeting will be recorded and posted on swoopfunding.com. And if you want to watch it again or recommend us to a friend or colleague, that is where you will find us. So today, I am delighted to be joined by Andrea Reynolds, who is the co-founder and CEO at Swoop, and also Ciaran Burke, co-founder and COO at Swoop. It's lovely to see you both in the same room, Andrea and Ciaran. Andrea, you've just come back from the States. Ciaran, you've just come back from South Africa. So where are you together, and what's the most interesting SME you've seen on your travels?
I got back in from Cape Town last weekend, and the place was teeming with really, really exciting businesses. I think when you talk to a lot of South Africans, the word they use a lot is resilience, but you can
Right.
see it in abundance with the SMEs in terms of like the creativity and the amount of entrepreneurship. So lots of different businesses, but a couple that kind of caught my eye in terms of some of the ones that Swoop has been funding in the South African market so far. There's a very cool one called Growing Paper. So essentially, they invest in this specific type of paper that you use for everyday use, whether it's kind of cleaning or sanitary purposes. But essentially, the paper has these specific seeds on it, so that you can essentially dispose of it, plant it, and then it turns into wildflowers. So it's pretty cool and pretty impressive. And then just generally, it was very cool to see how a lot of the funding was leading to employment. So we had a rural catering company, and she was able to take on 10 more new staff. We had a very cool cafe and bar called Honey and Zorro. They, again, were able to add more staff, but also expand the venue as well. So, yeah, came back with like just bursting with energy with the amount of opportunities there. Very cool panel of funders. But yeah, I thought that Growing Paper company was very, very cool.
Excellent. What about you, Andrea? What's caught your eye?
I didn't find any paper with plastic seeds while I was there, but I did discover, terrible that I discovered Chick-fil-A. And if we don't have that franchise in the UK right now, somebody needs to bring Chick-fil-A to the UK, is all I'm saying.
Oh dear. I think there was one.
Oh my God, it's so good. It's dangerous.
And is it like, because if you say Chick-fil-A or chicken fillet to an Irish person, they get pretty excited because we're very passionate about chicken fillet rolls in Ireland. But as soon as you come across to England, then they're hard to
maybe needs to start in Ireland.
How does it compare to an Irish chicken fillet roll?
It's just full of unhealthy chicken fillet that's really tasty.
Right, you've taken chicken breast and made it unhealthy. Now that takes some doing. I'm in The Hague, and the most exciting shop I've seen so far is a clock shop. I love a clock, and it's antique clocks. I just loved it. It's beautiful here. So let's start. That's overseas SME. So let's talk about British SMEs and particularly in the light of the budget, which is what people are here for. Let's start with the positive. What do you think has been really good in the budget that we heard this week?
I'll let Ciaran do some of the sort of the immediate announcement side of things. I was looking more for the longer term impact on business growth because the Chancellor sold this to us as a budget for growth. So some of the key things I was looking for were on any further announcements on pension reforms to unlock more investment into UK businesses, which is a huge lever for growth. So we'll speak more into that, I think. I was also looking at what were they going to do to continue to support manufacturing. And so we had a big announcement of another 4.5 billion into advanced manufacturing, expansion of the Made Smarter program, program, obviously making permanent the full expensing program. So there was items on the agenda there that I was pleased with. A bit of a rollback on some of the punitive announcements on R&D from the November 22 autumn statement. So some items in there that I thought, yeah, these are useful, and just a bit more vision on where we're going in terms of unlocking long-term investment into businesses. So there was a few things in there that I expected to see, and they were there.
What about you, Ciaran?
Yeah, I mean, overall, like as a general impact to SME, I would say maybe a 5 out of 10. As Andrea alluded to, there's some specific schemes that we can go into, whether it's advanced manufacturing or artificial intelligence, where there's specific large funding being invested, or if you're looking to locate into one of the investment zones or free ports or some of the new ones, there's definitely some big advantages to that. But obviously you saw like the hero thing that came out of the budget was employees themselves are going to net benefit from national insurance being decreased from 12 to 10%. However, SMEs still have to pay the 13.8% themselves, and that isn't changing at all. And essentially with the increased living wages, and also with people changing tax brackets, ultimately the end bottom line in terms of your wages is probably going to be increasing from an SME perspective. However, in terms of the positive pot, Andrea rightly pointed out, being able to offset capital expenditure. I mean, it was better for bigger businesses because the SMEs already had £1 million allowance in which they could offset this capital expenditure against IT, machinery and equipment. So nothing new there as such. However, again, positive to highlight is they've made that permanent, whereas that essentially was going to be capped in the future. So that definitely is something.
That's a good theme, actually. I do think it was kind of items that were either coming up for expiry or had been given an end date. Making those permanent creates an operating environment with more certainty.
Yes.
So there was no great wonderful giveaways there. Were we expecting them? No.
Yeah.
It's a kind of a rob Peter to pay Paul tinkering kind of stuff going on.
Yeah.
But I would say making things permanent was also a good step in the right direction.
And you can kind of see where there's correlations, because we saw 4.5 million in advanced manufacturing. Where's that going to? It's going to automotive, it's going to aerospace, it's going to life science, it's going to clean energy. But ultimately, if they're wanting the UK industry to manufacture more in automotive and aerospace, they're then saying to the SMEs and to the businesses, hey, do all your plant and equipment, machinery buying in here, and in turn, as Andrea said, put them into our everyday operations, because we know from the last budget we're going from 19 to 25% corporation tax. How can we look and be as tactical as possible to keep it in the 19%? So we know with future that we're always going to be able to do this each year. So that, yeah, definitely something to be welcomed. And I think for those businesses that are raising money from the private market, the most welcome thing is the EIS VCT extension out until 2035, because that currently had a deadline of 2025.
Well, let's look at that extension, because obviously that's good news. But have the EIS and SEIS, have those schemes really seen more investment in growing businesses?
Yes.
I
mean, I would say if you take the combination of autumn statements, it's good news on SEIS, EIS. So the previous autumn statement was increasing the SEIS allowance from 150,000 to 250,000. And then just giving us an extension of another 10 years. You know, it was coming up for expiry in 25. If that creates a question mark in investors' minds, is this going to be the end of the scheme? They would then look to deploy their investment funds elsewhere. So given that certainty again, and yes, it has transformed UK startup and scale up investment, and we're beneficiaries ourselves of this scheme. Yeah. It is 100% one of the best schemes that the UK has for investment into SMEs.
I'm just conscious we've said EIS and SEIS, and we haven't really explained what it is.
The acronym.
Yes.
The Seed Enterprise Investment Scheme and the Enterprise Investment Scheme. And if you are a business that is 7 years or younger in the UK and you're looking to raise investment, that is the first thing you need to be thinking about. So contact us or your accountant, and they can walk you through it. But that is how you raise money in the UK.
The really important thing to call out as well as why this is significant is you'll see many headlines in the UK press or international press at how venture funding and investment funding is massively down. I think the stat is 75% down in the UK. However, that doesn't really affect VCT's EIS funds because they have to deploy the capital on a regular basis, because essentially the reason I'm giving that fund or an individual cash is I can offset it against my tax bill the following year. So therefore that the cash has to be spent in a cyclical fashion. So by extending out VCT and EIS by another 10 years, those funds and people investing in those schemes have confidence that they can start to continue to invest in that way. And then the market is set up in a way where it can consistently deploy it year in, year out, and has to deploy it year in, year out, despite whatever the economic headwinds may be. So that's why it's a really, really important and interesting one.
Somebody has just asked, do clothing brands qualify? As for investment, then I would say absolutely.
Yes, it comes down to it comes down to you having a permanent establishment in the UK, and that you're trading for less than 7 years. If you're not an R&D intensive business, if you're R&D intensive, it extends to 10 years. But essentially, if you're falling within those brackets and you're looking to raise funding, then yes.
Okay, lovely. We talked. I think Ciaran mentioned the living wage growing. And the national insurance changes. How's that going to affect small businesses?
Well, yeah, so that's not great, because like if we look, let's take the national living wage. So that's gone up nearly 10%, 9.8%. That will go up from April. Not only is it going up by nearly 10%, what they've said is they're going to bring it. So the national living wage usually starts with people aged 23 and above. Well, actually, they're bringing that down to 21 above. So any business that is paying employees on national living wage is going to have a 10% increase in every member of staff 21 years and above from April onwards. So ultimately, the bottom line, and again, interesting, because in an environment where they're really trying to get inflation down to a 2% figure, one of the biggest impacts as to why inflation has gone so big is because national living wage and particularly wages in the service-based industry have increased at such a high rate over the last 2-3 years. It's had a massive impact on inflation. So from a bottom line perspective, it's not great for small businesses. And then if we look at the national living wage for those people aged between 18 to 20 years of age, that's increasing by 14.8%. It's good for them. It's going to put an average extra £1,800 in their pay packet on an annualized basis. But that has been bared by the SME business themselves. And as I said, there's no reduction in what the employer is paying on NIC. They're still paying the 13.8%. So ultimately, it's a net loss for them as employers, and it's going to have an impact on things like pricing and whether they put that back onto the customer as such. So I think no changing to things like VAT or corporation tax, because they've flatlined, stay the same, and actually corporation tax is going up as of the last budget. It's not great for us.
Yeah.
No. Ciaran has just been in touch to say, please provide more information on the investments for SMEs you're talking about in this webinar, i.e. how to apply requirements and contacts, etc. Tariq, I was trying not to be too salesy, but by all means do go to swoop.com.
We're emailing equity@swoopfunding.com. That goes into the full equity team, so get picked up in the most quick way.
Yeah, and he also follows up and says, would there be investors interested in a small business that's only been trading for 8 months? I'd say
yes, that's where SEIS is perfect.
So you're the hottest ticket in town. So as soon as that cash register rings, you've got a 36-month clock on you. But SEIS investors are super excited to meet businesses in their first 3 years of trading. What you're wanting to show in those first 3 years of trading is huge excitement and opportunity to your business model, where it's existing growth in sales, whether there's a future healthy pipeline, whether there's big advancements in technology, whether you have unfair advantages. That's what you're trying to articulate to the investor. But in the UK, if you have a business within your first 3 years as Andrea said, the seed enterprise investment route is absolutely what you should be looking at.
We're just being told to slow down. We're talking too fast.
All right, sorry.
Okay. So swoopfunding.com equity, isn't it? There we are.
Or equity at swoopfunding.com.
Equity at swoopfunding.com is the email address. Lovely. Thank you very much. Let's move on then. So lots of schemes. There seem to be lots of schemes to get people into work to plug the gap of vacancies. Always been talking about how many vacancies are. Does this mean that SMEs which can afford them are going to find it a lot easier to get talent?
I mean, if you look at the broad response, I mean, the way to always get an independent view of what this budget will and won't do is to look at the official budget of responsibility forecast and the OBR, because they're giving an independent view and they're saying that this will result in 200,000 more people being in the workforce. So that's a net positive. We need to improve the labor supply chain. That is another reason for inflationary pressures that we're seeing. So yes, it will have an impact, but this isn't an overnight situation. But anything to increase the labor supply will reduce the tensions that are there, particularly in retail and service-led businesses. So yeah, it will have an impact, albeit I can't imagine it'll be an immediate one.
Yeah, they have identified back to work as something they're trying to solve as a government. So there's a number of schemes and stuff they're doing in that space. So first of all, you've got the apprenticeship continued investment there. So they're putting another 50 million as part of this budget into apprenticeships. So that's definitely a way in which businesses can start to look at getting new talent, new employees into the workforce. The government is targeting those individuals that are deemed finding it tough to go back to work from a health point of view. So they are adding in further supports with those businesses that struggle from mental health, either in the form of support-based funding or offering greater flexibilities for those individuals from a work-based environment. So what I mean by that is working from home. So they're looking at trying to target these individuals. They're currently not working for health-related issues. I think they estimate there's about 700,000 that they're looking to turn back into full-time employees. So essentially what they're looking to do there. If you look also at the investment zones, this is an interesting way in which employers can encourage new employees, because what the government is saying is, we're going to give you this big tax incentive if you go to one of these 8 investment zones, if you hire new staff. So what I mean by that is, you have an NIC cap normally of tax cap of 9,100, after which you need to start paying tax on those employees. They are going to take that tax cap up to 25,000 for any new employee you're taking in that region, and they'll let you have that for 3 years. So it's a significant tax saving for that business to encourage new employment in those 8 investment zone regions, or in the Freeport regions as well. So there are a couple of the tactics in which they're trying to get more people back into work.
Okay, Tarek has just said that he got a 1-year school IT contract within the first month. So it does sound like there might be lots of people who are very excited to be talking to you, Tarek. So I put the email address in the webinar chat, so that if you didn't catch it, it's all there. Let's move on. So the VAT threshold is still at £85,000. That's where it's being frozen. Do you think this is holding back growth?
Massively. Really interesting. Hargreaves and Lansdowne came out and said, so the last one they changed VAT threshold was 2017. So they estimate that £85,000 as of today's money in 2017 is about 116,000. Or inversely, they're saying it's about it's the equivalent of running a business at 65,000 turnover. So what you're seeing happen, particularly with kind of sole traders or micro businesses, is they're capping their business activity at that threshold and doing no more. So this government is all about growth and getting people to do more. Well, actually, you're stymizing it by keeping that cap at 85,000 because the incentive to get your turnover higher than that is just not there.
I think it's a longer term play by the government. I think it's related to making tax digital, which they've delayed, and it's all down to HMRC. But I think it's related to that. I think it's about reducing leakage in the system when they eventually launch making tax digital. So I think that's why they've held it. I don't think that they were thinking, oh, we want to hold back growth or whatever. It has that impact, but I think what they're doing is waiting for making tax digital to come live, which is a bit ironic given that they've delayed it for business.
Yeah, how long do you think it's going to? Do you know, or is it a bit of a
piece of string? I mean, they keep deferring it. So, and it's they tried to say it was business that wasn't ready. It's not. It's HMRC is not ready.
Okay, let's move on. We have R&D tax credits. Andrea, what's the backdrop here? Every statement that comes out seems to have more announcements about R&D tax credits, and it's quite hard to keep up.
Yeah. I think you've got to take it back to this time last year to understand what's happened this year. So last year, up until November 22, in the last autumn statement, if you're an SME and you're involved in research and development, and you're looking at getting cash back on that. So businesses like ourselves, tech businesses or research and development businesses, when you plan for your investment into R&D in any given year, you plan into your cash flows that you're getting your cash back from HMRC for your investment that you've made. And last year, it was you would add up all your qualifying expenses and you would apply a rate of 33% to work out what cash back you were getting. 33%, remember that number. Okay, so this time last year, he makes an announcement to say, well, actually, we're taking that 33% and we're dropping it to 19%. I mean, you are talking Night of the Long Knives stuff here. I mean, a complete assault on SME innovation. Not just that. Oh, and if you're using subcontractors abroad, they will no longer qualify, which every single tech company in this country is using outsourced subcontractors. So needless to say, there was an absolute huge challenge back to Treasury. So they started to walk it back a bit in the spring budget. So this is what you're seeing now are walkbacks on that original statement. So we get to the spring budget and they say, well, you know what, I'll tell you what, we'll bring the rate from 19% back up to 27%, as long as you are an R&D intensive business. And the rule around that is 40% of your expenditure has to go into R&D. Okay, so, and don't even get me started on how you work out that 40%. So then there's still a bit of pushback. We get to this budget. What's happened in this budget? A couple of things. They're merging the schemes. So for accountants on this call who maybe are doing R&D tax credit claims for their clients, it'll be simplified in that there's one system, one claim process. That's maybe a positive from simplifying perspective. From the perspective of the walkbacks, they've now said, actually, we'll make it 30% of qualifying expenditure rather than the 40%. So there's a lot of ambiguity here. So if there's anyone from an SME perspective listening and they do research and development, they're wondering what type of claim they're putting in. The unfortunate answer on today's call is, it depends. It depends. Do you meet the qualifying R&D intensive bracket, or are you in the standard one, so you're still applying the lower rate? So it's a walk back situation, but if you're asking me to compare R&D today for SMEs versus R&D in October 22, it's a net loss for a government that tries to claim that they're tech bros. Well, Rishi tech bro, he's not a tech bro at all when it comes to the numbers. So it's better than it was this time last year, but it's still a net loss position is how I would frame it.
Yeah, I mean, I would completely agree with Andrea said there. I think the one positive is obviously the reduction of the 40% to 30% in terms of, but as Andrea said, you still have to work out what does 30% equal, but at least, it's not as much as before. Weirdly enough, though, I maybe read it incorrectly, but BDO put out a stat saying that they expected this to give 5,000 more businesses the opportunity to get R&D tax credits by lowering it. It doesn't sound like a huge amount of businesses to me. So I think fundamentally, as Andrea said, we're not in as good a position as we once were in it. That being said, if you are doing anything innovative, investing in new tech and new processes, and you're not doing R&D tax credits, you need to get your head checked, because it is still ultimately a brilliant scheme. So I think it's really important to call that out. Frustrating that it's not as good as before. However, as Andrea said, from a process point of view, a lot of people would have been, or maybe are in current frustration mode because it's taking so long to go through HMRC at the moment, because essentially they gave themselves their own headache of having split it into two schemes between the RDEC scheme and the R&D for SME scheme. So by bringing it back into one scheme, we expect it to smooth things out, so we have a much sleeker process, or a better than current process. So that hopefully is a positive as well.
And I should mention, by the way, that rule on excluding your subcontractors abroad, they actually deferred that to April 24. They were originally bringing it in April 23, but they deferred it to April 24. And the other plus, I should say, is they expanded out your qualifying expenses for hosting costs. So, you know, if you're on Azure, Amazon, etc. So that's a benefit there, I'm guessing.
Yeah. Oh, sorry. And that remind me, one upgrade for bigger SMEs. So big businesses, not SMEs, that were in that RDEC scheme, they can do 65% against subcontractors, similar to what SMEs can do.
Oh, and the other last point on this, sorry, it's another net benefit.
Last point, yeah.
Previously, if you were an SME and you got a grant, there was limitations on your R&D tax credits, whereas they're saying, well, actually now you can get your grant and your R&D tax
that's
credit.
A really good one.
So that's a good one.
Yeah, that's very good.
All right. We'll end on a positive note on R&D.
Long story short, it's very easy for the government to take more money, but it's a little bit more complicated to claw it all back again. Fortunately, at Swoop, we've just got Sahil, who's coming as our new head of R&D tax credits. I mean, talk about hitting the ground running. New rules coming in the moment he arrives. So hello, Sahil, and hope you're looking forward to the next couple of months.
With that.
Right, there's a government scheme that is going to help crack down on late payers, which are the scourge of all small businesses. In future, any large company bidding for government contracts will have to demonstrate that they pay their invoices to small business suppliers within, get this, within 55 days. I mean, is this a good sign, or is it just a bit weak to call that a crackdown?
No, but there is more to it than just the 55 days. I'm not saying they could do a hell of a lot more, but what they've said is it's 55 days from now. Next year, they're going to reduce it to 40 days. The year after that, they're going to get it down to 30 days. So I think they have set out the vision to say what they want everyone to get into is that 30-day payment rhythm. So I think they're showing a bit of leniency because, okay, yeah, financial systems, payment systems take a while to churn. So they've said, look, long-term vision, we need to get to 30 days. The thing that is, again, I can understand from their perspective, it's hard to influence. So what they're saying is what we can influence is any business that interacts with us as a government, they're going to have to obey by this and show what their average invoice payment terms are. But I would like to have seen a bit more kind of creativity and thinking outside of just businesses that interact with government, because ultimately what they're trying to change the dial on is SMEs waiting ages to get payments. So I think they could have thought a bit bigger and a bit more ambitiously around it. I do think the thinking is correct, and if we can, as a economy, move to 30-day business terms as the norm across the board, it will be hugely beneficial for all businesses from a cash flow perspective.
Yeah, I agree. I think they could have done more. This doesn't cost them money. They should have given more powers to the Small Business Commissioner, and I think they can give more powers to them, where we then start to ensure that we start at the top, that publicly quoted businesses, large corporations have to disclose within their annual accounts what their average payment terms are. And I think until we start moving to naming and shaming, and you give extra powers to the commissioner, we're going to continue to see this. But it is a good start. It's a start because actually the public sector are the worst payers of all, truthfully, in terms of late payment days.
Yeah. And when you think about how much people spend to borrow money, you know, late payments are just unagreed credit, isn't it?
It's that. It's intentional non-paying. And that's what it is.
Okay, well let's move on. What about manufacturing? Is there any positive news for the
There is.
Very.
There we go. This is a good news story. We're both nodding ferociously here.
Well,
Yeah.
so they've obviously identified it as a big one. The top line stat is 4.5 billion invested into manufacturing. The biggest net benefiter of that is automotive, and then the other three focus areas are aerospace, life sciences, and clean energy. So generally, they're putting a huge amount into this. Again, going back to my investment zones. Additionally, if you are looking to invest or develop in these areas, often there's a lot of infrastructure involved in anything to do with manufacturing. So one of the nice things about the investment zones, the free ports, obviously I touched on, if whoever your new employees are, you're going to save massively on tax. But the other thing that they're giving massive reductions in is on the stamp duty side of things. If you're purchasing any commercial property for development or commercial use, you can write that off. So again, if I'm in automotive, aerospace, clean energy, life sciences, and I'm looking to purchase commercial use or develop commercially, I would be inclined to look at these 8 investment zones. Also, I get to get 100% on business rates gone. You would have seen, yes, there's a business rates freeze, but if I go to any of these 8 investment zones, I can say bye-bye to those business rates as well.
It's important to put the nuance on the 4.5 billion that's being divided out amongst the industries Ciaran's just mentioned. It is all centered around transition to net zero. So, for example, in aerospace, they're getting close to 1 billion, but it's developing components, supply chains, etc., to move to zero carbon emissions. So it has that slant to it. So very much trying to move advanced manufacturing into where demand will be in the future. The second part is you might not be in one of those industries, but the other bit of good news there is the expansion of the Made Smarter program. And that is about helping manufacturers to move towards digitalization and technology to improve productivity. That has been an exceptionally successful program. And it was originally limited to particular zones where they were looking to level up. Now they've expanded it across the UK. So if there's anyone, if you have a client in manufacturing or you yourself are in manufacturing, these are 3 investment zones, Made Smarter program, and this new announcement of funding across the next 5 years. They are things to be looking at, and contact us or your accountant to get more on it, because you're missing out if you're not involved in one of those programs.
Okay. I know you're very keen to talk about pension reforms. And what are these pension reforms that have come in, and how do they affect businesses?
Okay, so I'm going to give you a stat, right? This is the most depressing stat. So in countries, you set up schemes in countries so that those who are here, financial institutions, invest in indigenous businesses. Every other leading economy has schemes where pension schemes can invest a certain amount into growth businesses. And we have issues with our pension scheme here, and that's what we're looking for, is this reform. So in 2021, Canadian pension scheme invested more in one UK business than the entire UK pension industry did for the entire UK industry in 1 year. That's how bad things are, okay?
Right.
If we want genuine growth capital, scale-up capital in this country, we need reform. So it's, again, I'm not telling you this is going to happen overnight, but by 2030, this will unlock about 75 billion into UK businesses to continue growing here and scaling here, rather than going across the water and bringing all of their IP and their resources with them. So for us who are interested in genuine growth in the UK economy, this was necessary to hear him talk about continuing reform on that. And it also means there'll be schemes where we as people contributing into pensions can actually have an element of our pension that invests in that area. So for me, this was a must-have item. If he didn't talk about it, I would have been pretty depressed. So it's not, as I say, it's not for today, but it's the direction of travel that the UK is going in.
Okay, there seems to be a lot of this putting in the base level of future growth.
Yes.
So, the Chancellor has promised this is a budget all about growth. Do you think he's delivered, or is it still in the post?
It's unfortunate sometimes, when you look at China or Singapore, whatever, they make 50-year business plans or 300-year business plans on their economies. And that's what governments should be doing, is actually looking at how you can have long-term impact. But they're in an election year, so they had to throw a few other crumbs out there. And they didn't have a lot of headroom. They had a bit of headroom. So I think there's a few good stories in there. I wouldn't say there's anything dramatic for any SME sitting here today. As Ciaran said, business rates freeze for obviously the struggling sectors of leisure, retail and hospitality. That's always welcome. It's tinkering, really, but the longer term stuff is about legislation rather than actually tax and spend.
Yeah, I don't think the budget lives up to the headline. And yeah, I definitely agree, Andrea. It's sad that most economies or countries don't think in long term, or even try to bring the narrative to the table when talking to the populace about why you need to think long term. Yes, there's some elements that they're starting to think more creatively, like pension reform, continuing to invest in AI, advanced manufacturing, all very welcome. Continuing ultimately to invest in R&D, extend out EIS, VCT. But ultimately, as the small business, not much is really going to be changed. You got a more expensive bottom line with wages going up, and things have either capped if you're a sole trader with the VAT or on your corporation tax. And ultimately, the big hero thing about, hey, we're going to put more money in your pocket from the national insurance going from 12 to 10%. Ultimately, the government will make that back themselves because with the tax brackets effectively saying the same, inflation's gone up. They've obviously calculated by moving the dial on the thing, they'll actually recoup more than people get. So it's a nice thing to say, but ultimately they'll make more money out of it themselves.
Okay, I've got a stack of questions here from people that registered. So these are the questions we had in advance. Right, first one is, what is the benefit of full expensing compared to annual investment allowance? So full expensing has been extended. What is the benefit of that over the annual investment allowance?
Sorry,
you want to go?
Yeah, well, I suppose
jump in.
Yeah, so I suppose full extension, not only extended, but it's in perpetuity, really, which is the great thing. So it's allowing businesses to be able to offset purchases in IT, machinery and equipment. And ultimately what they're able to allocate is kind of 25p for every pound spent, unless you're in the investment zones. You get 100% in your first year. Thereafter, you comply by the rules. For SMEs, it doesn't really make much of a difference because the scheme was there in place already, whereby they were able to offset up to $1 million, which was really, really important, because if we go back to the previous budget, we found out corporation tax has gone up from 19 to 25%, except where businesses have a profit of £50,000 and below, which it stays at 19%. So if your kind of profit was kind of near around about 50,000, one of the ways to maybe bring it back to into 50,000 was to encourage capital expenditure, keep you at that 19% investment rate, but putting assets into your business to help you do what you do, and in turn, from an economy point of view, putting more money back into the economy.
Yeah, I would say you don't just suddenly say to yourself, oh, full expensing is better than the annual investment allowance. It's actually an expansion of which scheme you should look at. So, for example, full expensing, you have to be an incorporated limited business, registered for corporation tax, and then you are purchasing assets that fall within the qualifying criteria. So, for example, it's not second-hand assets. It can't be assets you've used before and then you're suddenly bringing into your business. So and you're spending over $1 million. So full expensing, you're kind of looking down that direction. If you're a sole trader, partnership, or you're looking to buy assets that are secondhand, etc., and it's less than the $1 million mark, then annual investment allowance that's been there already is the one for you. And then there's a whole gamut in between that as well. So it might be that your asset is something more long-term. So that could be the special rate allowance. So I would say it's great. Again, what is the good news story out of all of this is that they've made it permanent. And when you make something permanent, people can make longer term investment decisions. So that's the good news story out of this. But it's not to say suddenly that annual investment allowance isn't the one for you and it's suddenly full expensing. It depends. But the message that to give to the audience today is, do not go and make that investment without having planned for which allowance you're using, because there's accounting elements to this as well, how you actually categorize and look after your full expensing versus annual investment. It's also, are you thinking of disposing that asset in the future, and what does that look like? Because with full expensing, there's balancing, like you will have to uplift again on your disposable value. So there's questions around this. So the message in brief for a short webinar is good news, it's permanent. Good news in that it expands it out for areas where you might qualify, but it's not necessarily the right answer for you. So again, I'm not trying to advertise for accountants here, but speak to your accountant before you do that, or speak to us so we can help you navigate that.
That's all right. We love accountants at Swoop. We love accountants. Are there any plans to support startups with bounce back loan repayments? I guess this is anyone that's done the seed.
The answer to that is a big fat no. And I know there was a reference to the sort of forgiveness scheme going on in the US. That's absolutely not happening here. And to give you some anecdotal on the ground information, the opposite is what's happening. So people who applied for bounce back loans just kept pressing the button until it gave you the 50,000 or the 25,000. If you're in default, they're getting quite punitive on this now. They're also, if people didn't give correct information, etc., they've started to ban some directors on bounce back loans now and making them insolvent. So the opposite is true. We'll never be getting anything out of that scheme other than make your repayments.
and also from a legislation point of view, it looks like they're even going to be coming down even harder, particularly maybe even if there's a government change. They're talking about setting up kind of committees to look into anything across that period to do with government spending or government intervention. So it will be quite the opposite.
Yeah.
So the answer might be to refinance if you're struggling.
No. Just keep making your repayments.
I think what's really important to pull out, because sometimes we'll get it, people coming into Swoop and talking about either refinancing a bounce back loan or trying to find similar lending to bounce back loans, or they weren't sure they were going to, because the rate of bounce back loan didn't work for them. There has never been a better lending product in the history of lending products than the bounce back loan in terms of rate and flexibility. So there is nothing, no matter what wizard or magic or anything like that, that can be made up to refinance a bounce back loan. You're never getting anything better than a bounce back loan. So it is nigh on impossible to refinance anything better than that. Like the base rate is higher than the bounce back loan rate itself. So it's very, very important to make people aware of that. So if you keep up your repayments, it is the best rate you're going to get.
Okay. Here we are. UK grants. Are there any UK grants for a small SME in Wiltshire to produce eco-friendly plant or capital to reduce the carbon footprint?
Yes, there are.
Okay.
Which is normally there's a scheme called Target 2030 that most regions have now, and I do know that the region in Wiltshire does have it. Particularly Southwest gets a lot. And typically you go to your growth hub. Again, we have these on Swoop, but you can look up your local growth hub. You can get an energy survey done. They will finance that essentially, and then from that you can work out how you are implementing your improvements, and there are grants up to 60,000 available to implement those improvements or new investments that you've to make. So the answer is yes, and that's not just true for Wiltshire. There is a big push to decarbonize, and so a lot of the growth hubs now have these energy efficiency schemes and trying to encourage more to go down that route, so giving you energy surveys as well. So definitely something to look at, and as I say, they're if you are building your profile on Swoop, you'll see those surface as an opportunity for you.
Okay. Couple of questions just to finish up here. We're in our last our last few minutes here. My question is this a budget that you think is going to put more money into customers' pockets, and therefore ultimately it's a good thing for all businesses because people are going to feel a bit richer?
Yeah, I suppose as I kind of touched on, I think if you're on the national living wage, you absolutely will be a net benefactor, particularly if you're aged 18 to 20. You're getting an extra 1,800 quid a year annualized.
Self-employed.
Sure. So if your profits are between basically 12.5 grand and 57 grand, you are able to reduce the NI bill from 9 to 8%. So say I had £28,000 profit, that gives me an extra 350 quid a year. The thing I said, just to call out though, is like, it may affect some people. The stat the government brought out is like, if I'm earning £35,400, I get an extra 450 quid a year. Now, depending on where your income tax bracket is, because of the changing effect of national insurance, you might find that what you're paying back in tax elsewhere on an income tax basis might somehow offset it. So ultimately depends on which income bracket you're in. But for some of them, they should have greater purchasing power, which obviously is definitely a net benefit for them, which hopefully then goes in terms of higher spending within the economy.
But I think, look, at the end of the day, what's going to move the dial on people feeling better and there's more money in their pocket? It's interest rates and energy bills. Let's just be honest here. It's not going to be a government giving you back whatever, £350 a year.
And your point shouldn't change.
Yes, so there you go.
So you can have a word with your landlord if they do try and stiff your point, because there is a freeze until August on alcohol duty, so it shouldn't change. Plus, they've got continued business rates freezes, and there's a 75% reduction for leisure, hospitality, and retail. So if your point does go up in the next 6 months or so, make
a complaint.
Yeah, make a
complaint. Let's end on a really practical note here. So if you're an SME, what should you be doing to make sure you've squeezed the most out of this budget? What would be your top tip?
Okay, so I will do my calculation on my R&D spend. Do I qualify? Am I spending 30% of what I'm spending right now as a business in R&D activities? If I am, absolutely great news. Make sure I get my R&D tax credit in. As a business, I'll be looking at my future, my forecasting. Am I looking to make any significant purchases, whether that's asset related? So again, how do I weave that in from an annualized perspective so that I'm offsetting that against my capital allowance? Does that affect what band I'm in from a corporation tax perspective? Again, if I'm making significant purchases in terms of commercial property or commercial development, then I would think very strongly about where I was purchasing them, and I would probably align it to the 8 investment zones. So I could reduce my stamp duty tax bill or get rid of it in some cases. And again, by producing or purchasing these commercial properties in those investment zones, I'd then be inclined to hire people in those zones, because for every new employee I've got for 3 years, a significant reduction in the tax that I'm spending on them. So if I'm a savvy SME, that there are a few things that I'd be doing.
So move to an investment zone, increase your R&D expenditure, and raise money under SEIS and EIS. And there you go. You're sorted.
Fabulous. Oh, I think we'll leave it there. Andrea, Reynolds, Ciaran, Burke, thank you so much for your time today. Thanks to you at home for watching. And I know that the one thing that the commodity that is very precious and in short supply is people's attention. So thank you for joining us to talk about the budget. This will be recorded, so it's out there. If you would like to share it with any of your friends, colleagues, people that need to see it, we'd be delighted. You'll get an email with that on shortly. Otherwise, it will be up on swoopfunding.com. Thanks, everybody. Have a great day.
Cheers.